Welcome to Money Moves. That tax refund isn't a bonus. It's your money the government held hostage all year and is finally giving back. And what you do with it in the next 48 hours will determine whether you're building wealth or staying broke. Today we're covering the tax refund redirect money move. This is Kevin. Every April he gets a tax refund, usually around $3,000 to $3,500, and every year he feels like he just won the lottery. Free money. It hits his bank account, and within 2 weeks, it's completely gone. This year, his refund is $3,200. He's already planning what to buy. That TV he's been wanting is on sale. He deserves it for all his hard work. $800. He treats his friends to a nice dinner. They haven't gone out in a while. $150. He upgrades his wardrobe. Those jeans and shirts he's been eyeing. $400. He books concert tickets. $300. He gets his car detailed, $150. Random Amazon purchases throughout the week, $600. 10 days later, Kevin checks his account, $800 left of the original $3,200. By the end of the month, it's all gone. He can't even remember what he spent it on. He's in the exact same financial position as before the refund arrived. This happens to most people. A tax refund feels like found money, even though it's literally your own money being returned to you. You overpaid the government through paycheck withholding all year. They held it interest-free. Now they're giving it back, and you treat it like a windfall. Meanwhile, your savings account is still empty. Your retirement account is still underfunded. Your emergency fund is still at $200. But hey, you have a new TV. Let's talk about what that $3,200 could actually do if you made a different choice. If you invested that $3,200 in a Roth IRA, put it in a low-cost index fund averaging 8% annual returns, and left it alone for 30 years, it would grow to $32,000. One tax refund, one smart decision, $32,000 3 decades later. If you did this every year for just 5 years, investing your $3,200 refund each time, that's $16,000 invested. In 30 years, that becomes $160,000. You're not adding another penny after year 5. That initial $16,000 grows to $160,000 through compound interest. Most people never build wealth not because they don't make enough money, but because they treat windfalls like spending opportunities instead of investment opportunities. You get a bonus at work. You blow it on a vacation. You get a tax refund. You blow it on stuff you don't need. You get birthday money. You blow it on dinner and drinks. Every chance you have to build wealth, you choose temporary pleasure instead. And 10 years later, you wonder why you're still broke while other people are retiring early. Meet Sarah. She gets the same $3,200 tax refund as Kevin. Same amount. Same day it hits her account. But Sarah does something different. The moment she sees the refund, she logs into her Vanguard account, opens a Roth IRA if she doesn't have one, and transfers the entire $3,200. She doesn't see it as spending money. She sees it as future money. She invests it in a target date retirement fund. Set it and forget it. She doesn't check it obsessively. She doesn't panic when the market dips. She lets it grow for 30 years. At the end of 30 years, that single $3,200 investment has grown to $32,000. She did this 5 years in a row while Kevin was buying TVs and clothes and experiences he barely remembers. Sarah invested $16,000 total over 5 years. By retirement, that's $160,000. Kevin spent $16,000 on stuff that's now in landfills or forgotten. Sarah turned it into $160,000. Same starting point, same income, different one decision at tax refund time. This is the difference between people who build wealth and people who wonder why they can't get ahead. Here's the brutal truth. If you're getting a large tax refund, you're doing your taxes wrong. You're giving the government an interest-free loan all year. The smart move is to adjust your W-4 so you break even at tax time. But most people don't do that. So if you're going to get a refund anyway, at least make it work for you. Here's your exact action plan. First, before your tax refund hits your account, decide what you're doing with it. Don't wait until it's sitting there tempting you. Make the decision now. Second, open a Roth IRA if you don't have one. Vanguard, Fidelity, Schwab takes 15 minutes. Third, the day your refund hits your checking account, immediately transfer it to your Roth IRA. Don't let it sit. Don't tell yourself you'll do it next week. Do it immediately. Fourth, invest it in a target date retirement fund or total stock market index fund. If you don't know what to choose, Pick a target date fund closest to when you turn 65. Fifth, do not touch it. This money is for future you, not current you. Sixth, adjust your W-4 withholding so your refund is smaller next year. Use the IRS withholding calculator. The goal is to break even at tax time, not get a big refund. Here's the mindset shift you need. A tax refund isn't free money. It's your money that you let the government hold all year. You already earned it. You already paid taxes on it. They're just giving back the excess you overpaid. Treat it like the serious money it is. Would you take $200 out of your savings account to buy a TV and clothes and dinners out? Probably not. So don't do it with your tax refund either. The tax refund redirect money move is simple. Every tax refund goes directly to investments. No exceptions. No, just this once. No, I deserve it. Future you deserves financial security more than current you deserves a temporary dopamine hit from shopping. That's the tax refund redirect money move. Decide right now what you'll do with your next refund. Subscribe for more money moves that build wealth instead of waste it. What's your next money move?